Hey, what's up guys? John here. Some of the biggest auto lenders in America are refusing to lend on cars. I believe it's because of two reasons. One is a new law that's set to take place June 1st of 2027. This new law will require all insurance companies to notify policyholders in writing of increases north of 10%, suggesting we're going to see massive hikes for insurance rates going forward.
For Americans behind the wheel across the country, all roads lead to the same place: skyrocketing insurance rates.
Cost of auto insurance. It's up nearly 15% over the last year.
Rates could actually more than double this year.
I believe we're going to see rates going from $500 to $1,000 per month. Might sound far-fetched, but right now, many people are spending $350, $400 a month in many big cities. In Florida, it's extremely expensive just for basic coverage. Wait until you look at this data that's coming forward right now with uninsured motorists. People are saying, you know what, forget these insane policies. I'm just going to go uninsured. And it went from 8%, 9% to 12 to 14%. 1 in 7 drivers right now, no insurance. And so when people get hit or they get into accidents, what's happening? Well, they're filing their claim with their insurance company. Their insurance company is suffering bigger losses, and they're going to push these losses onto consumers. They add in, on top of this, increased costs to repair their vehicles, increased costs to fight and litigate claims, as well as many other problems. But I believe what we're going to see here is a negative equity bubble in auto loans that's going to far eclipse anything we've ever before seen. I mean, look at this, for example. This came out, says that nearly 1 in 4 consumers who finance a new vehicle with a trade-in were upside down on their loan. You look at Google Trends, negative equity is just exploding, absolutely exploding. You look at the breakout terms, negative equity or car trade-in, negative equity on car. It's massive breakouts on all of these search words. And why? Because people are looking at their pocket. They're saying, you know what? I bought this car in 2021 thinking everything was just going to go back to normal. And now this car that I bought for $40,000 is worth $30,000, worth $25,000. I can't afford fixing it. I can't afford to, pay for it anymore. I got to give the keys back. I got to do something, right? When you have 1 in 4 people that bought a new car going through this mentally right now, and you see this changing job market, and you see what's happening with insurance, it's quite clear what's going to happen next. It's going to be an absolute disaster in the automotive industry, and I'm going to break it down and give you the facts. Please hit the like button. Hit the like button. YouTube will share the content, educate more people about what's going on in America's economy. And if you'd like to fix your credit to position yourself, what I believe is going to be a massive wealth building opportunity, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative or derogatory items in your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free call for tomorrow. Take a look at this. So even Ally Financial, a major lender, their shares plunge as consumers are struggling to pay back their loans. They're saying in Las Vegas, everyone has a reason why insurance is getting crazy. Las Vegas, they're saying it's partygoers are to blame. What they're saying here is that it's because of weather events. They're saying increased costs to repair vehicles up over 40%, higher settlement costs due to more lawyer involvement in claims, rising prices of new and used vehicles, increase in severity of car accidents since 2020. Some are even saying, no, it's because of all the new people. Look at this.
Who did this?
730,000 views.
You did this? Yeah, man, this is the 3rd wreck today. We got to do something about this.
Look.
4th car collision.
4th.
Oh, this is the 4th. This is the 4th wreck involving the New Americans.
Oh, so we are just turning right exactly.
Did you? He can turn into here. You can't.
So everyone has a reason or a belief or a understanding of what they think is happening in their specific market, their specific area. But the reality is people just can't afford it, and they're going to start canceling more and more and more policies because they would rather not pay their insurance company and risk it than pay their lender. And so what we're going to see here is a further demand for insurance subsidies when people get hit with somebody that doesn't have insurance. There's going to be more and more and more of these claims, more losses by these insurance companies, and they're going to push these costs onto everybody else. Rising premiums are prompting more motorists to drop insurance, and their choice is pushing up premiums for other drivers. The share of motorists without insurance rose 11% in 2019 to 14% in 2022. I think we're going to go to 16 to 18 to 20% in the next couple of years. In Florida, it's 15.9% have no insurance. Then you have, this is 1 in 7 drivers are currently uninsured. And they say here that, if you get hit by a uninsured motorist, that your rates, they say that, you'll be able to sue the driver at fault, if they have money, but your rates will go up by 9.32% as an average. If somebody hits you or you get into an accident with someone that they themselves don't have insurance and you run it through your policy. So car insurance rates could jump 50% in 3 states this year. They say there is some bad news ahead for the nation's car owners, with a new report forecasting that auto insurance, one of the biggest drivers of inflation this year, will continue to rise in 2024. In fact, residents of 3 states could see their coverage spike by 50%. 50%. Look at this. I mean, they say increasingly severe frequent weather events, the same exact reasoning, right? But they go on to say that drivers in Maryland currently pay the highest average rate of $3,400 for annual full coverage as of June. Their rate is projected to jump 41% to $3,748 by year end. Over $300 a month. The second most expensive state, South Carolina, with an average policy premium of $3,336 in June. That could rise 38% to $3,687 by the end of the year. So you have all of these states pushing. California, so look, California, they're saying it's going to be up 50%. Minnesota, Missouri, and Surify report drivers in those states could rise 54, 61, and 55% respectively. So just imagine what this is going to mean. It's going to mean a bloodbath inside of the automotive space. Look at where interest rates are right now to get an idea as to where the demand is going to be. Because if lenders are pulling back, they're going to continue to increase rates on borrowers. They don't want to lend. So right now it's 13.92% if you have a 601 to 660 credit score, which is, the average was a 698 in America. That was last year. Credit scores have been dropping because a lot of utilization on credit cards, late payments, things of that nature. So for this example, let's just say they're a 650 credit score borrower. The 13.92%. 13.92%, and a used car is $27,000. A new car is, somewhere in that $47,000. So we'll just say low end, $30,000. 60-month term, 13.92%. You're at a $673 payment over the next 5 years. So you have to ask yourself, how many people will be able to pay $1,000 a month, $1,100 a month? Not many people. All in with car insurance. This does not factor in for gas. Does not factor in for repairs. It does not factor in for the cost of owning a car. Like the actual real day-to-day cost of owning a car. Tires, oil changes. It doesn't factor in for all that. That considered is probably closer to $1,200 a month, $1,100 a month. How many people can swing that right now? Not many people. And so when you look at the projections, what they said was going to happen in 2017, Business Insider, Forbes, all the major publications said that we would see a reduction in cars on the road by 80% in the next 4.5 years. So when you look at where we're moving right now with car insurance, with this affordability crisis, it's very clear that we're going to see millions and millions and millions of people losing their cars. And when you look at what a lot of these billionaires are doing, they're selling off tons of assets and stock right now. Why? I believe because we're walking into an affordability crisis and a crisis inside of this country to like something we've never before seen. When people can't drive to work, how do they work? How do they drop their kids off at school? How do they do all these day-to-day, things that they need to do to make money? How do they work a side hustle, right? Everything is going to be online. But if everything is online, then Americans are going to be competing with people in India. They're going to be competing with people in different countries. They're going to be competing with people with a much lower cost of living. And so it's going to be a race to the bottom in a lot of wages. Now, I'm not saying that, all these mainstream publications are right, that we're going to see an 80% reduction, in vehicles on the road. But I do believe, without doubt, we're going to see a massive reduction. How big? The time will tell. I think it's going to be significant. I think it's going to be one of the biggest auto market corrections and crashes that we've ever seen. What do you think about this entire situation? Where do you see all of this going? How high will insurance actually go by now to, say, 2027? Let's talk about it in the comments below. If you'd like to fix your credit to position yourself what I believe is going to be a massive wealth building opportunity, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative or derogatory items on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free call tomorrow. Catch you next video.